Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, we have Vika Shah. He's the head of fintech investment banking over at Rosenblatt Securities. And we're going to take a look at the digital asset revolution. Vika, this is perfect timing. Cryptocurrency really in the news this week with Libra, so plenty to talk about here. Where are we in the digital asset revolution?
So first of all, Jill, thanks for having me.
Of course.
Pleasure to be here. We are, I would say, if you really wanted the analogy in terms of baseball, and we'd say top of what inning, I think we are really top of the first as far as retail investors are concerned that are participating in digital assets. But from an institutional investor standpoint, you're really in the mode of building up the infrastructure, the stadiums, the rule book that is really required to be in the digital asset space, because once that floodgate opens, it's going to be a much bigger game than what it is right now. But long story short, very early innings for digital assets on the retail side. Institutional, we are still even not begun the game yet. But once it begins, we think this thing is going to be a very long game, and some very interesting things are going to happen in this space.
It is really interesting because usually institutions lead retail, but this retail is really the one that launched this product. So it's I can understand why it is taking longer to adopt. Patience does need to be exercised. What's the impetus to get this more mainstream?
Yeah, and so on the institutional side, really the impetus is about having the infrastructure that can give the industrial strength that is needed. Everything from the confidence, the ability to put significant amounts of money to work and not be fearful whether it's going to be, there's going to be some kind of hijacking going on and some kind of, going on in terms of crypto heist and stuff like that, which has been prevalent in this space.
Yeah, but it happens in legacy assets also.
It does. But the thing is, what happens is the crypto and blockchain technically is a very industrial strength assets where you can track exactly where the flow is going. But the thing is, what is really still an Achilles heel for the industry is that once the heist happens, it's very difficult to track exactly where it's coming from. So that last mile, so while you're able to track the chain, but if there are operational weaknesses in on the venues, on the exchanges that are trading it, that becomes very hard to track. And that's really one of the reasons. The other part is really, in order for institutions to pick up, is becoming what's called clearing and custody battle. And a clearing custody battle is extremely important because it's what institutions look to and take solace in and confide in terms of having confidentiality and having somebody to stand behind if something were to go wrong. And that is believe it or not, in the world of crypto or digital assets or otherwise, still a very important factor for most of the institutions.
So it sounds like fintech is really paving the way and institutions are catching up.
Exactly. And the thing is, I think there's a number of technologies coming up right now, and a number of important steps being taken, including Nasdaq actually doing through the smarts mechanism, the surveillance, the compliance, the monitoring side of it, which is something very, very critical, is to really have that infrastructure in place. What will also really help open up the floodgates is clarity from the regulators. Right now, the SEC has come up with and given some guidance, but the guidance is still kind of muddied. It's not 100% clear exactly the roles and responsibilities. There are people like us who are in the broker-dealer business. We are more worried about potentially punitive damages that can come as a result of facilitating certain transactions that can come and haunt us, our broker-dealer license fundamentally. So people like us we go by the book, we are going to take a more measured approach. Doesn't mean that we are not staying on top of it, doesn't mean we are not really becoming a student of the markets and market structure that is coming up and evolving in digital assets, but it's something that we are going to dip our toe in water first before we really go head down.
Well, it's really interesting, going back to the SEC, just got that recent approval for the Reg A token offering from Blockstack.
Correct.
We had the CEO on last week. They seem to kind of slowly be on board, but Secretary Mnuchin and the lawmakers don't seem to be quite up to speed. And is it more of political grandstanding, or is there a legitimate concern out there?
Right, and the thing is, I think it's interesting that the regulators around the world are moving at different speeds, and some jurisdictions are moving faster than the others and more liberal than the others, but many governments around the world are really taking an approach of, we don't want this thing, a genie to get out the bottle before we are able to control it and bring it back in the bottle. And that is, they're creating these sandboxes, whether the FCA out of the UK or even the SEC here in the US, or a number of other jurisdictions around the world. They're creating, exactly seeing what is the flow, how is technology able to help, but more importantly, how are they able to really track the transaction and what's going on and stuff, and not create a parallel currency where it becomes all of a sudden things out of control on regulating monetary policies and stuff like that. And that's really where the debate with Libra comes in, is eventually does Libra become a currency of its own so big that it overwhelms any one government monetary system.
Yeah, it sounds like the central banks are not ready to give up that control.
Clearly, if you see the resistance that has been coming out from around the globe, whether it's Europe, US, foreign jurisdictions in Asia, everybody's saying, we are not ready for this. We need to really understand the use cases, understand long-term implications of something like a Libra, because now you're not talking, 1,000 retail investors here or 1,000 there. You're talking en masse adoption of currencies like Libra that can really, really put pressure on what called fiat currencies around the world.
Why are they so concerned with Facebook's Libra? You didn't hear that much noise around JP Morgan's introduction of a stable coin, when they were talking about that last year.
It's a fair point. I think JP Morgan's discussions was much more centered around commercial applications of it, not so much on the retail side. Facebook, it's just Facebook, and anything, the fundamental resistance is coming out from the point of really protection of personal and privacy protection, which is what Facebook has unfortunately breached over the past few years, and it has become very known and very public. And everybody, including the lawmakers and the regulators, have been very wary of using this as a mechanism to lure and attract people to transact that they cannot track. And it's the ability for regulators to track and monitor exactly what's going on in the economies is really what's scaring them.
It seems like they understand it on the institutional applications, but not so much on the retail side. Meanwhile, retail led the way in terms of product introduction.
Exactly.
So there's so many caveats there.
There are so many caveats. And the thing is, and Facebook really gets into the retail side of it very quickly. And eventually, really nothing's stopping them from getting into the institutional side as well. So Facebook has the market moving power. It's got the critical mass where adoption were to take place. It can be extremely rapid if not controlled and measured.
All right, great conversation. Thank you so much, Vikas.
Of course.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.